Today guys, I'm going to be doing this video from Pine Tree Park here in Miami Beach. It's a beautiful little park that we have here in town, and it's pretty empty today. So it's going to be a little bit of a change from what you normally see. We're not going to be seeing any houses for sale today. So, in the comments, let me know if you guys enjoy coming to different places like this as well, or if you just like being in the neighborhood where we see everybody's houses and things for sale, stuff like that. Let me know. But today we're going to start off talking about Florida's insurance nightmare, guys, because that's exactly what it is. There are so many issues with insurance companies in Florida right now, it's not even funny. And to be quite honest, guys, this is a very complicated issue, and I'm going to do my best to summarize what's happening and the latest update in a way that's easy to understand. Because even me personally, I understand things best when they're dumbed down to a point where it's just easy to understand. So I'm going to do my best to summarize what's going on with this so everybody out there watching can get a grip on what's happening. So in a nutshell, a lot of insurance companies in Florida are either voluntarily pulling out of the state of Florida because the risk and expenses are too high, or they're just flat out going insolvent and going out of business, guys. So basically one thing that's happening is all the insurance companies here in Florida get rated by this company called Demotech. And what Demotech does is they look at how financially stable a given insurance company is. They look at all different types of things, which I'm not going to bore you with, but basically they look at, can this insurance company pay, X amount of claims if necessary, and they give them a rating. And if their rating drops below a certain threshold, then they can't issue new insurance policies specifically to people that have a mortgage, because they don't meet the mortgage lender's requirements. So there are a ton of insurance companies here that don't meet these requirements, and right now there's 17 more insurance companies that are looking at possibly not being able to write policies in Florida anymore. So basically the government has put a small hold on these companies being able to pull out of the state, especially now that we're still in hurricane season, because it's too much of a risk for all these people to lose their homeowners insurance all at once, okay? But in the meantime, if these 17 additional companies do get their Demotech rating downgraded, then all of the people who are insured with these guys are gonna be on the hook, essentially, if their insurance company gets downgraded or just downright, goes insolvent like so many others. And basically what's happening is insurance rates across the state are exploding right now to compensate for this. You can think of this as like a special assessment that all these insurance companies are starting to charge who are still in business here in Florida. So anybody who has homeowners insurance here now are probably going to see their rates skyrocket over the next year. They basically need this extra money to pick up the slack, because there's so many companies that are at risk of leaving and going out of business right now that, this extra money that's being charged supposedly is needed in order to even keep these current insurance companies afloat. So as you guys can see, this is becoming a major issue here in the state of Florida, and it's going to be more difficult over the next year for people to get new insurance policies written, especially in places like this where I'm at right now. This is waterfront property, guys. I don't know if you can see this behind me, but we're right on the Intracoastal Waterway here, and on both sides of this park are bordered by these big waterfront mansions, and it could be next to impossible to get insurance in places like this in the near future. And then to top it all off, guys, get this. As of July, about 30% of the homes that were sold in the state of Florida were paid for in cash. And when you own your house in cash, you don't actually need to have homeowners insurance, and some of these people just flat out opt not to have it because it's so expensive and they take their chances. But the median home price that's being sold in Florida right now is $412,000, guys. And insurance works off of replacement costs of what it might cost to actually rebuild your home in case of a total loss. And right now, these insurance companies can basically only handle claims up to about $300,000. So if your house is worth the median price here in Florida of $412,000, but the maximum your insurance will cover is only $300,000, well, you're on the hook for the extra $112K. So this should be something that everybody should be looking at right now if you are looking at buying real estate in Florida, if you currently own real estate in Florida, because rest assured, you're going to be affected by this, and I'm going to be affected by this too, guys. I already paid my insurance in advance for this year, so I don't know what it's going to go up to next year, but I'm willing to bet it's going to go up, and I'll keep you guys posted on that whenever I get the new bill and how that's going to go. But basically, everybody who lives in Florida right now is affected by this and could be looking at trouble. You know, if you haven't gotten your roof replaced in the last 10 years, basically, you could be easily losing your coverage right now if you have a single family home. And even though condo insurance is generally cheaper because the master insurance policy of the building covers all the common elements and the most expensive parts of the building, even those policies are going to start going up. That's the type of policy that I have. So everybody's going to start paying more for insurance in Florida real soon, guys, and it's going to be interesting to see how this affects the price of housing down here, because obviously Florida has been on fire over the past few years when it comes to real estate prices, and it's going to be interesting to see if something like this is going to be enough to slow things down here or even reverse prices. So we'll find out soon enough. Now, Mark Zandi, the guy from Moody's, he is another one in the media lately saying how there's going to be a housing market correction, but there's going to be no crash, guys. And his basis for this is basically the same argument that everyone gives. He's saying things like, I just don't see the kind of mortgage defaults that we had back in the last crash. There's also not enough distressed sales on the market, meaning foreclosures and short sales. And he says that's when you get a crash, whenever you have lots of foreclosures and lots of distressed sales. And you know, all the loans that have been written recently are good loans. So it's the same argument over and over again of why there's not going to be a housing market crash, right? But my counter argument to that is, first of all, I'm not Nostradamus, guys. I can't say for sure there's going to be a crash, but my counter argument to those type of remarks are things like this. What about this insurance issue we just talked about, especially here in Florida? Okay, you could say, well, Michael, that only affects Florida. Well, not really, guys. This affects a lot of coastal states like Texas and Louisiana that are very hurricane prone, including Florida. I'd be willing to bet over the next couple of decades, this insurance issue is going to start bleeding out into even more coastal states like Georgia and South Carolina, New York, different places, guys, because hurricanes hit those places too. So Florida is just the big poster child for this right now, but this could easily spread to other states that are surrounded by water in the future. So don't think it's just happening in Florida and that's going to be the end of it, because at the end of the day, insurance companies are out there to make a profit. And how do they make a profit? By not paying claims. That's how they make the profit. So get ready for this. Another thing I say, what about all these people getting laid off right now? And even more layoffs are expected to come by the end of the year. What about that happening, guys? What about inflation and this global recession that we're in right now? What about all these other countries like New Zealand and Canada, Australia, the UK? All these places are having big problems with their real estate markets right now, which we'll touch on in a little bit here. What about affordability in general? Okay, the average person can't even afford to buy a house right now at these current prices and interest rates. So you got people like Moody's economist Mark Zandi saying how, you know, there's not going to be a crash this time, and just pointing to the same old factors, how, you know, there's no bad loans and there's not a ton of foreclosures right now, and that's going to be the end of everything. Well, I don't think it's that simple, guys. I think a lot of these economists and people aren't looking at all of the things out there that can potentially harm the housing market right now. they have paddleboard rentals here now. Something they didn't have last time I was here. You bring it right down to the water right over there. Now the next thing, guys, is you have to be really paying attention for fake real estate agents right now. So here's the first thing. A ton of people decided to jump on the bandwagon and get their real estate license during this housing market boom, which is not a surprise. This happens every time there's a boom in housing. You have a ton of new agents come into the business trying to make a quick buck. That's normal, okay? But what else is normal when these things happen is the rise of real estate scams. And one of the most recent ones to look at happened right here in Miami. Big surprise, you know, we have all kinds of scams happening here 24/7, guys. Florida in general is like the scam capital of the world, it seems like. But what happened is this woman pretended to be a real estate agent, and she took an ad out for a rental property claiming that she was the listing agent and started showing this place to prospective tenants. And I don't know how she got the keys for the place or obtained access to the listing. This article did not say. However, she managed to show the place to several people and ended up taking deposits from several people as well. And what happened then? Well, on the move-in day, when it came time for these people that she took the deposits from to come and move in, big surprise, she was not there to hand over the keys, and she disappeared with their money. And she's since been caught, she's been arrested, and she's, on top of that, claiming not guilty, guys. So the reason I want to bring this up is because, first of all, this can happen to anybody, okay? And the other thing is, I wanted to give you guys an example of how you could potentially prevent this from happening to you. The first thing that you can do, guys, which is very simple to do, you just need to ask your current real estate agent or somebody you're thinking about working with for their license number, and you can verify this on any state website that does the real estate licensing. So here in Florida, for example, the name of the website is called myfloridalicense.com. You can go there and verify that somebody is in fact an active licensed real estate agent. So that's the first thing. And if you have doubts as well, another thing you can easily do is, you take the person's name and you call their office and make sure they're a verified agent there. Does this person still work there? Do they have an active license? Just make sure before handing somebody money that you don't even know, guys. Now, obviously, any legitimate real estate agent would never do something like this, because not only is your reputation on the line, but so is your license and your livelihood. So no real estate agent that has any credibility whatsoever is going to steal money from you, okay? But there's a lot of fakers out there and people pretending to be real estate agents, especially right now, because people are vulnerable, guys. People get vulnerable when housing gets this expensive and people are desperate for a good deal. And just like the saying goes with everything else in life, if it looks too good to be true, then it probably is. And this can easily be applied to housing, and this is why you need to be careful and protect yourself and just make that simple little phone call or that simple little verification online to make sure the person you're working with is in fact a real estate agent. Now, guys, if you think the US is in trouble right now with housing, this is nothing compared to what other countries are going through right now. Places like Canada, Australia, New Zealand are seeing already double-digit declines in their home prices there, and we have just entered this recent global recession only a couple months ago, and this is just getting started, guys. And one of the economists from the Bank of Japan, he recently said that we're going to see a global housing market downturn into 2023 and 2024. And by the way, I want to thank Nick, one of my subscribers and channel members, for sending me this story. So thanks for sending this to me, Nick, so I can include it for everybody to hear in today's video. Now, here's the thing about these countries like Canada and Australia, New Zealand, places like this, guys. It's very common for people in these countries to have adjustable rate mortgages that need to be either refinanced or the rate resets every couple of years. This is just normal over there. This is how things work. So for example, here in the US, only about 7% of all mortgages right now are adjustable rate. But when you looked at that in comparison to these other countries, that's nothing, guys. In Australia, 100% of the mortgages are adjustable rate, okay? In Spain, it's more than 50%. In the UK, it's about 40%. In Canada, it's over 25%, and the list goes on, guys. So in these other countries, there are massive numbers of people that have adjustable rate mortgages right now that are set to basically reset within the next 12 months. Now, on top of these adjustable rate mortgages, guys, to add insult to injury, a lot of these people are now making less money when you account for inflation, because inflation adjusted wages combined with the increase of cost of living, even though your dollar amount on your paycheck has gone up, your cost of living and inflation has gone up significantly more, which effectively makes it so that you now make less money than you did before at a time when everything costs more than it ever has before. But yet, at the end of this article, they basically go on to say, but don't worry guys, it's all gonna be fine. You know, the labor markets are super strong right now. People still have a ton of equity in their homes, and the lending standards are much higher than they used to be. Very similar to the story and the narrative that Mark Zandi from Moody's gives. You know, that's the argument for everybody who thinks that the market can just go on like this forever and everything's going to be fine. Now you guys can say, oh Michael, you're always just saying it's going to crash, but you know, things are still looking great or whatever. Now guys, I think that all these problems that we're having could bring the ship down. Maybe it won't, but you know, the signs are there that we have massive potential for things to go down. And all you have to do is look at other countries right now, and compared to those countries, we're in pretty good shape, guys, because we do have most of our loans here are fixed 30-year or 15-year mortgages. We don't have as many adjustable rates as these other countries do. So in that respect, we are much better prepared to weather this storm. But once again, going into this recession, and with the amount of people looking at job losses, and you look at the average American doesn't have $500 for an emergency, guys, how are people like this going to survive? I think a lot of people are going to turn to home equity to pay their bills in times of desperation, which can easily just compound the problem and make it even worse. So these are the type of things that the economists and Moody's and all these guys aren't talking about, and that's why I'm talking about it here in these videos, to give you guys another perspective of how this might all go down. Because while these things that they say are true about certain things being good, there's a lot of things that are not good right now. And speaking of people turning to equity, guys, the amount of tappable equity that people have is starting to decline as home prices start to go down, okay? The average homeowner's equity has gone down about 5% recently. Well, you can say, all right, that's not such a big deal. 5% compared to, you know, 30% appreciation in the last couple years is not a big deal. And you're right, it's not. But remember, this is just the beginning. We're not even at the end of the year yet, and this Bank of Japan economist says this housing downturn is going to go well into 2024, guys. It's still 2022. So imagine if these numbers and these figures keep persisting over this next several months, and we keep seeing these declines in prices and home equity and things like this. I mean, you don't think that that could potentially lead to a lot of people going underwater and getting in trouble on their homes? I think it easily could lead to that. And forget about the averages, guys. If we look at some of the extreme examples of where people are losing the most equity, look at this. From April through July, so that's only a few months this year, San Jose, California, okay? They lost 20% of the equity in their homes just in that time frame, guys, okay? Followed up by Seattle. They lost 18% of the equity in their homes in just those few months. San Diego, they lost 14%. San Francisco, down 14%. LA, down 10%. So clearly, depending on where you live, the amount of tappable equity that you have could be going down a lot faster than somebody else who lives in a much more stable housing market. So this is something else that everybody needs to be looking at, because it can easily contribute to the amount of people going underwater and basically not being able to turn to their equity in times of desperation. So if that's the only last resort that a lot of people have, then what's going to happen when people don't even have that? Guess what, guys? Here comes the foreclosures, here comes the short sales all over again. And I know that this is theoretical, this has not happened yet, but this is how it can happen and why we all need to be paying attention to this right now. Now, one of the biggest counter arguments I hear a lot in the comments is, Michael, why would somebody who has a 3% interest rate and got a great deal on a house ever want to sell in times like this when values are starting to decline and interest rates are higher if they need to move somewhere else and this and that? Well, I'm not going to talk about that much in today's video, but in a future video, guys, I'm going to cover a few scenarios of who might need to sell and why, because of what's happening out there right now. So get ready for that. If you guys enjoy this type of content and you want to hear about that, make sure you are subscribed to the channel, because I'm going to be talking about that very soon. Because everybody thinks that there's no reason that anyone who got a low mortgage rate would sell right now, but that's just not true, guys. Like I said in a previous video, and like my real estate broker says, for over 30 years in business, people always are moving, okay? Deals always need to happen for one reason or another, so we're gonna get into more of those details in a later video. And just to add to the very last point that I was talking about of homeowners who are losing equity, guys, right now, there's about 275,000 homeowners nationwide, okay, that if they were to lose 5%, just 5% of their home equity, they would be underwater, okay? And we're not even talking about the people in these really expensive markets that are losing 20, 15% equity. These people just need to lose 5% and they're underwater, okay? And more than 80% of those people who are in that 275,000 category bought at the first half of this year and basically bought at the top of the market, and now things are starting to sink. So keep that in mind as we go into the end of this year and next year. But I would advise everybody to look at, are you one of these people who bought in the past 6 months, and how much did you pay, and what are homes selling for in your area right now? Because it might come to your surprise if you are one of these people who's underwater right now. So this is just another thing to look at, guys, to find out if you're being affected by this or not. If you guys enjoyed this video and you found it entertaining, please subscribe to the channel. Check out my next video on the screen right over here, and I'll catch you over in the next one.